Welcome, my name is Daniel Serrano from Forest Systems. I'm a client service engineer, and today I will be showing you the tax and cost basis adjustment transaction in our Forest Systems software. The tax and cost basis adjustment transaction is designed to work with an equity account from your chart of accounts. So the very first step in configuring your system is to open up the chart of accounts in Forest Center and then creating that specific account in your chart of accounts in the equity section. To do this, we'll have to take a few steps to get there. Addy Justice is actually an individual, not a corporation, so we're actually going to have to adjust our equity labels in the chart of accounts and relabel those as net worth. So here we are going to switch over to our master list, and we see all of our available categories and groups, and even some accounts where we can create them in the chart of accounts. I like to collapse everything and then expand because it just makes it easier. But here we can see step number one is to reclassify this equity label to net worth. It's already been created, it's already been changed, but the default section or label is actually equity. So we would highlight and just rename it to net worth. It is cap sensitive, so if you want to have your chart of accounts in all caps, make sure you hit that caps lock, click outside the field to save the change, and then expand to the next level. The next level will be the group, and here we're just going to change it from equity. Again, it's already been changed, but you can change it to net worth and just have it repeat, or you can have net worth adjustments. Same process, double click, and then just edit the name. Adjustments. Click outside to save, and then we do the next level again. Next level is actually the category, and this is where we'll enter the prior year's earnings adjustment label. It's just a category, not the account, but once we label that, change that label, we expand it again, and then we'll be able to create the account by just clicking Add New Account. And I'm just going to add a new account since I already have it created. But you add it, and you can be as transparent as you want. These accounts will show up on your balance sheet, so if you want to have one general one like I'm using right now for prior year's earnings adjustments, you could, but you could be more specific. Have one for tax cost basis adjustments, tax only, or one for wash sales. Once that is that, we are ready to move on to the configuration of the transaction type with the account that you selected. So we're going to start in Forest View. So we're going to log in to our browser. So we're going to go to Forest View. I am in Forest View right now. We're going to go over to Entities, select Entity Management, and then find that specific entity and click the Edit Settings. Here we're going to see some entity level settings. So these settings will get applied to all your accounts in this particular entity. We want to come down to Default Adjustment Transaction Accounts. Here we will see any balance sheet accounts that you created will show up here. You can select any account you want, but again, this feature is designed to work with an equity account. We're going to select the prior year's earnings adjustment account for both transaction types. Again, you can have different accounts and assign one for tax basis adjustments and one for tax and cost basis adjustments. It all depends on the level of transparency you want to use. Once that is set, we click Save Options or Save Changes, and then we're ready to go back to Forest Enter and configure the exact same settings, but at the journal or account level. To do that, we go to the Transactions menu. We open up the particular journal, and then we're going to click on the Journal Options, which is located on the top right of the screen. And here it should look familiar to Forest View, where you can select your capital gains account as well as your default adjustment transaction accounts. And we repeat the same steps. Select the prior year's earnings adjustments. Again, you can have specific accounts for specific journals. So if you want to have separate adjustments accounts for one particular brokerage or one particular methodology, you can do so and have separate ones for each journal. you will need to, if it's not already populated by default, check off a checkbox, which is usually located right in between these two right here. And it is called Show Action Column. Since we're in a broker cash account, that column is there by default. It cannot be removed, so there's no need to do it. But if you're in a bank account, a general journal, you would see that option. You simply make sure it's checked off and save changes. So now that we have everything set up and configured correctly, we are now able to enter the transaction and adjust our cost and tax basis for a particular investment. In this case, we have 2 lots of Microsoft common stock, and we're going to be adjusting the cost of both lots. We simply go to the Enter Transaction row, enter the date, enter the transaction type in the Action column. We're going to select Tax and Cost Basis Adjustment since we want to adjust both the tax and the cost. We select the payee. You have flexibility here. You can have your own methodology. However, the system is designed to work with a general or a broader payee type. So in this case, I'm just going to use Tax and Cost Basis Adjustment. Some of you might choose to use your investment name. That is perfectly fine. But again, software is designed to follow these particular steps. After we select the payee, we select the account. And I have 3 lots of Microsoft here. One is in a Merrill Lynch account. The other is in a Goldman Sachs account. Actually, 2 lots are in the Goldman Sachs account. We're just going to select the Goldman Sachs account, one of those, and select the Post button. The Post button will bring up this adjustment distribution window, and will display accounts that share the same symbol as the account that you selected in the Enter row. So it's all Microsoft accounts, but as you remember, there's a third one at Merrill Lynch. It's not displaying because that one is at Merrill Lynch. This window also filters those accounts by qualifier. So it's only showing us accounts that share the same symbol and the same qualifier. You could remove the qualifier if you wanted to, but in most cases you wouldn't need to. To enter the amount that you want to change the cost basis by, you simply click on the basis amount, and you can enter a negative number to decrease the amounts, or you can enter a positive number to increase them. You click on the calculate button, and the system will automatically allocate that amount according to the individual tax basis or cost basis of that particular account, and then allocate it proportionally or prorated as a percentage of the total. So here we have 45.45 for lot number 1 and 54.55 for the second lot. If these are wrong, or for whatever reason you need to change them, you can just simply click on them and adjust them manually. There are buttons on the far right, these scales, that if you click on them, it'll auto balance the remainder, and just plug in 25. The cost and tax basis adjustment, you can edit the amount on either of the columns. So we can do this here. And it'll automatically adjust both columns at the same time. The tax only one will only affect the tax basis adjustment and leave the cost basis alone. But after we do this, we can click on OK, and the system will actually generate a transaction for us. And if we open up the multiple distribution for that transaction, we will see it's a double entry transaction. We see the allocated amounts for the individual accounts as debits, since we're increasing the tax basis. And then we see the balancing entry to the prior year's earnings adjustment account that we configured in our journal options. All right, so now that we have entered the transaction, we're ready to go back to Forest View and generate a report to see how this affects our balance sheet. So we'll minimize Forest Enter, open Forest View up again, click on Reports, Balance Sheets, and we're going to use a basis balance sheet so we can see both our costs and our tax as well as our market value. We're going to generate it as of January 1st, 2021. Even though our transaction for the tax basis adjustment was on the 15th, I'm going to generate it as of this date so you can see the before and the after effects. So here we see our cash account and our 2 lots of Microsoft, and down below we see our net worth. this net worth section is a separate section from the equity account or the equity section. So the reason I'm showing you this before is so you can see that this net worth label is actually coming from a different section, not the chart of accounts. This section makes it easier for you if you're an individual. It kind of tracks your beginning net worth, gains, and income. But as soon as we enter or have an equity account with a balance, we will see the equity section show up, and our balance sheet is actually going to combine the equity section with the net worth section. So as you can see here, we have our prior year's earnings adjustment account from our equity section, and our net worth label at the top is now capitalized. It's capitalized because that is how it is in the chart of accounts. The one before was not capitalized because it's actually coming from your entity settings over here. There are a few things here you can do. Again, this is going to be preference to you in your particular office, but if you want to have more control over some of the accounts down here in the equity section, for example, this net worth beginning, you may want to create it as an actual account in the equity section as well. To do that, you simply go back to Forest Enter. I already have the chart of accounts open, and I actually have the net worth beginning account already created. It's under the net worth adjustments category or group. You can move it around. For demo purposes, I'm just going to leave it here, but you can essentially move it anywhere you want under any category, under any group. To remove it from the net worth section, we'll have to not only create the account, but give it a starting balance. So we're going to go over to Accounts menu, click on the Balances option, and then open up the Balances tab. Here we see the net worth beginning account, and we're just going to click on the starting balance column and enter a starting balance that is equivalent to the balance that we see on the balance sheet. So it's 80,000. So we just come here, enter 80,000, click outside to save the changes. We're going to go back to Forest View, regenerate this report, and now we see that net worth beginning has been moved into the equity section in its own category. The net worth beginning from the net worth section is now gone, but you still have the same balance sheet, it still balances, and now you actually can book transactions directly to this account, since it's an actual account in your chart of accounts and it's not being maintained by the system. All right. The last thing I want to touch on is making a second or a follow-up adjustment to your unrealized gains and losses. The reason being is that because you have adjusted your costs, you're also adjusting your capital gains when you go to sell the investment. An easier way to view this is to actually run the cost basis adjustment or the cost basis balance sheet. And here we actually see that we have a difference of $100 because of that adjustment we made. So we need to, at least this is my personal preference, I want my market value unrealized gains and losses account to reflect these changes as well. So in my books, I would go in to Forest Enter, and I would just book it in this particular journal. Most of you might probably use the general journal or some other journal for adjustments. That is perfectly fine. For these purposes, I'm just going to enter a regular transaction without a transaction type. And let's go with unrealized gains and losses adjustment as a payee. I'm not going to enter an amount just yet. Instead, I'm going to open up the multiple distribution window. From here, I'm going to add a new distribution. And then I'm going to select the prior year's earnings adjustment account. And we are going to debit the unrealized gains and loss account. And we're going to click the scale to auto balance the prior year's earnings adjustment account. Actually. And now we're going to look at the effects on it on our balance sheet by just regenerating that same balance sheet again. And now we see that our unrealized gains and losses down here at the bottom, our market value matches our loss according to the tax and cost basis adjustment that we entered. So we're losing a total of $100 here of a loss, the unrealized gains and loss account now matches a $100 loss as well. So when you go to sell it, your unrealized gains and losses will go down to 0. I'm using an example of a balance sheet where there's only 2 lots to make it simpler. But if you do not book this transaction here, when you go to sell these 2 lots, you'll actually end up with an amount in your unrealized gains and losses, even though you have no assets. Another key thing to think about, and it's easier to see on the basis balance sheet, when the balance column amount in the for the prior year's earnings adjustment amount in the balance column matches the cost basis, your unrealized gains and losses account is relative to your adjusted cost. When this amount matches your tax basis, your unrealized gains and losses account is being tracked relative to your tax liability. If this amount is 0, then your unrealized gains and loss account is basically being tracked at your original cost. Again, this is up to you to decide how you want to track that particular account. My personal preference is to track it according to my tax liability. And that's why I entered that last adjustment. But after that, that's all you have to do for the adjustment transaction. And so that was the tax and cost basis adjustment transaction. The tax-only adjustment transaction works almost the exact same way. It just has a different effect on the balance sheet. It will only affect the tax basis column.